Cryptilians and crypto crackheads, today is Friday, April 2nd, 2021, and you're about to get timified. New viewers, you haven't seen a crypto channel like this before, so let me tell you what you're about to see. And actually, I don't want you to hit like, I don't want you to subscribe until you look at the content and see if it's for you. I actually don't want you to do that until the end. I would prefer you watch this on ×2 speed and see if I am able to show you things that folks who sit there and read white papers and interview people aren't showing you, because what we're going to do here on this channel is a couple things. First, I'm going to teach you how to be confident when you're clicking around with your money and your adrenaline. I'm going to show you how to be confident with your entries, so you have extremely statistically low chances of hitting buy and then it goes down 30% when you wake up. That's one thing. The second thing is this channel shows you how to take profits like a boss. Know statistical most likely areas that you should take profits, and then look for a retracement down so you can buy back more. That's what this channel is going to do. So if that sounds good to you, let's friggin' get moving. Cryptilians and crapto. Hey, crapto people. Cryptilians and crypto crackheads, are you ready? That was weak. Yell louder at your screens. Are you ready? Okay, let's get going. So let's go. Let me do this first. Nope, wrong one. Let me do this first before I forget. Okay. So this video is mostly about Bitcoin and general market psychology and the psychology of what is actually moving price. So for new viewers, all of this here that you are seeing is literally just a map of human psychology, right? That's all it is. And it's the psychology of people with money, perhaps people with whiskey and money, you know, like a lot of drunk people are trading. This is a lot of people taking out loans and getting divorces when they do the wrong thing. This market psychology is like super amazing. It's super amazing. So if you like this, you might want to go look at my yesterday's video, because this video is kind of like Shrek 2. This is a continuation of yesterday. Anyway, so before I get to what I want to show you, I want to say something that I haven't stressed enough is on my channel is, you all know that I'm midterm and short-term bearish on Bitcoin for all the reasons I've been stating, right? And almost 100% of all crypto traders out there are not, right? I'm pretty much the only one, because trend reversal, it's pretty freaking ballsy. It's pretty risky. But I think I have the odds per the information I have. However, the point I want to make is, even if I'm wrong, I'm going to make money. So when you are wrong on when you try your technical analysis and you're clicking around, hopefully the way you wield or the way you manage your 3 most probable situations and 2 what ifs, because you're aware of them, and most likely not all 5 are bullish, you are prepared to make money. Even if the one you think is going to happen doesn't play out, you need to make money. You don't make money off of technical analysis and being right. You make money off of trading. Trading is one thing, technical analysis is another. Right? So you need to be making money when you're wrong. And I haven't stressed that enough. Almost every other crypto YouTube channel out there is bullish right now, and I am not. So, if you've been following, a lot of the reasons, and I just realized another reason I haven't been able to get to. And this is a major reason where I think that other traders, who I watch on a daily basis, because it's great information. I need to know what other people are thinking, because they are also part of this as well. And they help me understand globally what's going on with sideliners who aren't trading, who are waiting to become a seller, or who are waiting to become a buyer, or buyers who are becoming sellers, and vice versa, and all the combinations there. Their ideas help me understand better the global market sentiment, the global psychology, because I don't think of everything, right? So you need to also be educating yourselves by watching perhaps at least one other trader out there, and because that's how you're going to better prepare yourself to make money when your technical analysis didn't end up prevailing and price went the other way. And by doing that, it'll help you make money. So let me give you an example real quick, and then I'll get to the point of my video here. For example, there's another really brilliant, he's brilliant, crypto trader who's more of a scalper. So he looks at the crackhead time frame, so 1 minute, 5 minute, 3 minute, 15 minute, all that crap that I stress that you all don't watch, which I still stress that you don't, because you're not in front of a computer 10 hours a day trading. You're not a trader, so don't do that. However, it's still good to learn from that, because scalper traders, they have to be even more careful with their stuff, right? Because they'll lose a lot of money if they guess wrong and price moves even a little bit in one direction. So like, they're extra careful. And I think that you could value from at least learning what they're thinking on a very tight, not only a tight frame, but like an exponential frame, because each mistake exponentially is bigger, right? Like by leverage times 50 or times 100, right? So so it's really cool to learn from those people. But anyway, there's a really brilliant and pretty arrogant, but he's cool. I like him. He's very smart, very gifted person. You know, I might be overconfident and a little cocky, but he's arrogant, but very brilliant, and he's polite too. Despite being a little arrogant. But anyway, so the information that I got yesterday that I shared, that this 1 hour here, so I'm on the hourly chart, this hour here was in all of Bitcoin history, the 1 hour, more than any other hour in all of Bitcoin history, that the most liquidations in raw US dollars happened in 1 hour ever. And I got that information from another trader, right? So you need to be out there watching good information, and that's just one example. All right. And also, that same person and a couple of others today have also mentioned something that I mentioned before anybody else was. We are approaching a 7th green candle, and Bitcoin has not done that in recent history. Therefore, that puts the odds slightly more in my favor. And then a lot of traders have said that since then, but and including that one from whom I got that information. All right. So educate yourself on other people's thoughts, and it'll help you make money when you're wrong. Okay, so that's the first thing. The second thing is another area. So Shrek 2. So this begins the Shrek 2 continuation of yesterday. One way that I think that the other traders out there, which is almost all of them who are bullish, one thing I think they're overlooking, and perhaps are falling into the trap of being bullish and only looking for bullish things, right? Which it's possible I'm doing the same thing, but in a bear sentiment. So please take this with a grain of salt. What I'm about to tell you could be myself falling into the trap of trying to look for things that align with what I want to happen, even though I'm way past the trading point of wanting anything to happen. It's just, I think it's statistically probable that we're midterm and short-term bearish, and it's possible that I'm just ignoring all the bullish stuff and focusing too much on the bearish. So please take this with a grain of salt. But one thing that I think that they're missing in terms of they're doing that is global market sentiment, the global psychology among these three players. For new viewers, this is sideliners, people who are not, they are lurking in the darkness, waiting to become a seller or waiting to become a buyer. So they're tether holders, essentially. These are buyers, these are sellers. Buyers always become sellers at some point. Sellers always become buyers at some point. I guess I'm using a superlative always. I shouldn't do that, but you get the point. So there's a constant exchange, almost like, pouring hot water into a glass of cold water. There's an exchange of heat or energy across all of the molecules, and it's just going and then it evens out, and then the water finds a balanced equilibrium temperature. And so there's constant chaos here, but over time there's some sort of equilibrium, best fit line or whatever, but there's constant movement, right? And so one thing where I think these like almost all traders out there are missing, especially English trading, is the idea that in Far East Asia, I bet you that most of them are bearish. Why? So Japan and China trade a lot of Bitcoin. And I don't think they're being considered. Why am I saying this? Because Far East Asians, they trade candlesticks a lot. Candlesticks are my primary secondary. So they're my top secondary way to trade. My primary way to trade is moving averages, you know, and indicators like RSI, all that kind of stuff. And the things that I have pulled up here. And for new viewers, I have how to set up your charts video if you want to set your chart up like me, which is probably a damn good idea. But anyway, I think, so this is my secondary way to trade. So if I don't have enough signals, or I just like, you know, I don't really know what to think, sometimes I'll rely on candles. And that will push me over the edge to feel confident and feel like I have a very good edge in my trade, right? But still, even if I'm wrong, I should have plans in place to make money if I'm wrong, right? So anyway, candlestick trading, Far East Asia, that's how they trade. The majority of them. It was invented in Japan from the trading of rice, essentially, and that's where futures came from as well. Like the Japanese are a big deal in terms of you know, commodity trading and markets of movement. Like they were pioneers in this crap, and so culturally they still trade heavily on this. And I think most American traders aren't considering them that they are a mix of this, and that I think there might be more bears over there than bulls, and I think there might be more sideliners over there who are really ready to pounce on that, and who typically, or perhaps that a portion have already come on this, kind of tipping the tables, and it's just a matter of time until the Far East Asian sideliners further jump on this, right? I think American or English-speaking traders are overlooking that. So what do I mean? Candlestick, what's going on? So let's look at this highlighted part here, okay? So if the doji represents, well, I didn't say what doji is. What's a doji, Tim? Is this Dogecoin? Are they talking about Dogecoin? No, not talking about Dogecoin. So these candles here are dojis. Doji just means so the meaty part. So this is the meaty part. This is the meaty part. This is a wick. This is a wick. This is a wick, right? So the candle, the meaty part, it just means small body, long wick. That's pretty much all it means. And there are lots of different types of dojis. Like if the body's in the middle and the wick is long, that's like, you know, called spinning top. Or you could have the candle up here and most of the wick down here. It's still a doji, but it's a different type. Or you can have them like this and like that as well. You know, there are lots, but these are kind of like spinning tops, essentially, right? So those are called dojis, and dojis are traded very heavily. They're highly considered in Far East Asia. And I think that's being overlooked. So if the doji represents the top of a retracement, okay, which you don't know that's happening at the time it's forming, a good reminder to the viewers, a trader could then interpret the indecision and potential change of direction, subsequently looking to short the pair at the open of the next candle after the doji. All right, so look here. Does this look here? Kind of a high, a local high, a drop. It comes up and retraces up, doji, then continues its trajectory down. Bitcoin. Left click, Tim. Left click. So you can drag. Don't go all the way over here. Left click, Tim. Thank you for the reminder like 3 weeks ago. I just have been forgetting to do it. And being an idiot going like this. I'm trying to drag my chart. Right click. Okay. Anyway, so Bitcoin, all-time high. Generally kind of down. First retracement up. Doji. What's probably going to be next? Continuing the midterm trend down after this retracement, just like this textbook frickin' picture. Now, if you don't really consider candles a whole bunch, there are a ton of more Western-based indicators, like bullish divergences on the RSI per price. So which would mean lower lows on the RSI. So this one is lower than that one, but that is represented with higher lows, and it's really easier to see like something on the 4 hour, higher lows on the chart. Okay. So I don't even know if I said that right, but there's bullish divergences in a lot of places. So And I don't think I showed you on the right time frame either, but I'm not going there. So a lot of Western ways to look at things are very bullish, and I think the Eastern ways are being overlooked. Okay, so that is just one piece of information that I think that adds to my house odds that the direction that my general sentiment is has a statistically likelier probability than continuing the more macro trend up. So this isn't necessarily a trend reversal as in the bear market begins. This is just looking for a quick correction before you can continue. You gotta get down to get up, right? So that's pretty much my Shrek 2. Candlesticks, Far East Asia, doji. Okay, another thing that I have seen is one way that I use Stokes is try to be one step ahead of the market because they essentially indicate stuff that could happen before they happen, and Stokes are a really good indicator of that. And really my go-to for that is often the daily or the 4-hour, and it's really obvious here on the 4-hour. So the way I use Stokes primarily, there are lots of ways to use Stokes, but the worst way to do it, new traders, you don't sell here and you don't buy here. Oh, you might get it right 3 times in a row, but then you're going to lose all your money. This isn't sell, this isn't buy. I know your brain wants to make it look like it is, but trust me, that's not true. So a better way to use it, among many good ways to use it, is you draw a horizontal trend line of what? Support and resistance, just like we do up here, right? So look at this. Let me actually make this bigger. Look. Look. Resistance, 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 resistance. Support-ish, resistance, resistance, support. What's this one? Resistance. And what did I say Stokes do? It indicates what could or is probable to happen before it happens because it's a super fast moving indicator. It just got rejected, which is indicating that price is getting rejected from this fairly high line close to its all-time high around 60,000, which is based off of these candles, these candle wicks here, 60,225. Price recently went up to 60,180, got rejected, and doji. Finally, the midterm pattern will continue down. This is indicating that is about to happen. And as I've said a few times on my channel, is that the 4-hour, so I'm up here at the 4-hour, the 4-hour is really good to judge daily or like inter-week movement. So when you want to try to inter-day trade, you don't use the daily. If you want to do monthly and weekly trading, the daily is the way to go. It's just how it works and how things move in terms of indicators. So the 2-hour and the 4-hour are my intraday trading go-tos because it moves just fast enough. It's just nimble enough, but not too crackheady to where it shows you good signals for intraday. Or the 4-hour really is better like on a 2 and 3 day time frame. And I like the 2 and 3 hour for like the 2-hour for intraday stuff. But the 4-hour is still good for intraday stuff. So speaking of the 2-hour, what's the 2-hour doing? Holy cow. It got rejected where? Because its trend line's higher. Look, the trend line isn't the same across all things. See how it's up higher on a different time frame? See that? Look. All right, look. Rejection, resistance, support, resistance, resistance-ish, support, rejection twice. I don't know. I just think the odds are stacking up in the bearish sentiment favor. I mean, I know there are a lot of indicators that bullish, and Ethereum just made an all-time high, but I think this is a freaking trap, and I think a lot of people with big pockets are setting up a trap. It's like a double trap. The Cardano news was a trap. I was right. I think this is a trap. I might not be right, but we're fucking gonna find out really soon. So think about it this way. If this is a trap, perhaps with a little coordination of deep pockets, maybe exchanges talking to each other, or, a couple hedge funds, which happens. Folks with deep pockets kind of going in on it, ready to take money from a lot of people who don't know how to trade very well, and they're listening to trader or YouTube channels who are suggesting that they use a specific website to use 10x leverage and go bullish. If those people truly are doing this and it's a trap, think about this. If they are coordinating it, trying to make it look like something is naturally bullish, right? Is there something out there in which we would be able to see that, yes, they made price and maybe Stokes and maybe maybe something look bullish, like almost everything, but wouldn't there be one indicator that showed us this is not natural, therefore this smells like a freaking trap? Do you think there's an indicator? I think there is. I think it's the RSI, and it's essentially kind of like, it's like a derivative of price itself. So yeah, it's easy to make price print patterns, inverse head and shoulders, which actually does play out. Like, that's one of the patterns that kind of plays out on short-term time frames sometimes. But when those people are not understanding what's going on with buyers, sellers, and with bulls, bears, and sideliners, then they get their money taken because they don't understand that stuff. But anyway, so one thing is RSI. This RSI, you can't see shit. So let's keep moving the story. This RSI, you can sort of see, in order to make new highs, what this green line is here for is the green horizontal. It means you can't make higher highs unless the RSI is in the green. You can't do it. You can't make a new local high without this at least piercing through. It doesn't have to stay above, but it has to do this in order to make new highs. It's not happening. New highs aren't going to be made, period. It's not possible. With this looking like this, is it possible that it could change? Start going like this? Absolutely. That would mean new highs. All right. So, something like that would mean new highs. It doesn't have to stay above, but it needs to be piercing through it. And then the moving average of it, which is the white line, folks, new viewers, kind of like that. That would mean, okay, we can break 62,000. What the hell is the top? 61.6. We could break 61.7 like this, but it's not happening. So new highs ain't happening right now, period. So the people with deep pockets, if this is a trap, it's because this is kind of like a derivative of price itself. What their pockets are printing aren't able to control that, essentially that relativity point, that derivative. Let's keep changing time frames. Is that in the green? Nope. Is that in the green? Nope. It's actually getting lower and lower. See this? Huge bearish divergence. That is sick. That is bad. Like that is severe, right? So look, there's an all-time high of Bitcoin, high RSI. A new high of Bitcoin, a lower RSI. Bearish divergence. Now this pump, it's not even over the green, which means the relative strength is lower, which means it's running out of gas. Look, it's not above the green. You're not breaking 61.6 like that, period. It's not going to happen. And folks with deep pockets, they simply can't control this because it's a fake out. Because it's not really going to make new highs. And this is kind of giving you the clue. Now, could this easily just go, could the moving average just do something like this, in which then RSI just busts through and goes like this? Absolutely. But it's not happening. But it could happen. More bearish divergence, more running out of gas, more of current RSI is not above the green line. This is above the green line, but you just got rejected. You're about ready to get rejected again, most likely, because in 3 videos ago, I showed you not one time in Bitcoin history I guess it was actually the 2-day, not one time in Bitcoin history has RSI been rejected even one time and not hit this white line, which means it fully retraces about 30-something%. Doesn't touch this line until it hits about 30-something%. Not one time. Not a single time. All of Bitcoin history. It's been rejected 3 times. So people who are bullish right now are betting on a first for Bitcoin out of like 11 years of price history. I don't know. I don't think that's a good bet. Okay, so here's the one I wanted to get to. Remember I said something not natural, right? And there's probably a way to find it if it really smells like a trap. Look. So I'm on the 2-week time frame. So looking at price, you can see pretty much all of Bitcoin history. Watch. See? All of Bitcoin history. Besides like 2011 and stuff, right? When price was like $1 and $10 and stuff. So right here is about $80. Or something like that. About 100. All of Bitcoin history. Do you see something kind of strange that might not be natural? That might make it smell like a trap? Do you see anything not natural that's never happened before that might smell like a trap? Do you see anything not natural that might smell like a trap? I think that's what a trap looks like. Not natural. I don't know. So what do you think? Leave me a comment below. New viewers, if you liked what you saw. You know, this, most of my videos are new viewers only. I'm addressing you. You know, most of my videos are about altcoins because, altcoins, I mean, factually, mathematically, factually, give you better ROI, period. In a bull run. And they also drop harder in a bear market, trust me. But in a bull run, you will make, you factually and statistically have better ROI in small cap alts, period. There is no argument for that ever. Even buyers and prayers, if you hold it till December, you will be better off doing that in a small alt than Bitcoin or than Ethereum or than Cardano. Okay? Like from January 1st. I think the ratio of that, so, you know, the ratio of small alts, which will, from January 1st of 2021 to the end of the bull market, like let's say December this year, January next year, the ratio of small alts that would perform better ROI than Cardano in that 1 year time frame, January to January, it's probably 90%. And Cardano, because it dropped so hard and it went so low, even though I guess January 1st it had rebounded a little bit, but they will have like 90% plus will have outperformed even Cardano, which has had a pretty impressive run. Only because it was so weak, right? It hasn't even passed its all-time high, so it's not strong at all. And Bitcoin's more than double its all-time high. Bitcoin's way stronger than Cardano, which is why I don't know why people keep freaking buying Cardano. It's the biggest, it's a 5-year running hype coin based off of promises and literally 0 results, 0 delivery. But anyway, but it really has screamed up. So that's mathematically factual. So most of my videos are about altcoins and how to enter them safely and how to take profits like a boss. And because they scream up higher, because you mathematically, factually have better ROI than investing in big cap coins, taking profits like a boss means you're taking more profit than if you're in OMI, than if you're in Cardano, than you're in whatever hype coin Theta. Now, if you bought Theta during the bear market, man, when it was 40 million, woo, yeah, that might be one exception of a big cap, but you got it when it was a mid-small cap at 40 million. That's your ROI, right? When it's small cap. And so my channel, we typically deal with small caps, you know, like 20 million and under. And so we like to ride them until they go to the hundreds of millions or whatever. So if we catch coins at 2 million market cap and it ends up going to, ends up going to 200 million market cap, we 100x our money, right? And in between, when we're taking profits like a boss, buying dips and stuff, we're actually going to do way more than 100x. And that's what we do here on my channel. Profits like a boss, not buying and praying. So if you like what you saw, leave me a comment whether you want to be a cryptillion or a crypto crackhead. And if you do like what you saw, go ahead and subscribe before you leave me that note. And and actually, I don't need you to hit the like. I know how to use YouTube algorithms good enough. So don't even hit like. Give me a thumbs down. No, don't give me a thumbs down. But anyway, I will see you next time. Cryptillions, crypto crackheads, and new viewers. You just got Timified. Happy Friday. Stop looking at the charts. Take a break. I know you're probably not going to do it, but try to do it. We'll see you later.